All right, that is my entry, guys. Oh my God, bro, I got late entry. Why? All right, I'm gonna put my stop here. This is gonna be the break-even zone, unfortunately. All right, break even now. Oh my God, dude, where are we going? What the? I'm gonna get my full TP here. We're going for full TP, boys. Oh my God. Oh my God. Oh my God, bro. What? Yo, we paused, boys. Let's go. What you just saw was me passing 3 of my 100k Apex accounts, and I passed them right in front of Discord members live and everything. I challenged my Discord that I'm going to pass these challenges right in front of them, and I did that. So I'm going to break down some of the trades, and also I'm going to teach you the exact strategy so you guys can understand how I navigate through these markets after the 9:30 New York time open. Now, once you learn this strategy, you will have 2 strategies in your arsenal. The one is about gold. I've made a lot of videos about the gold strategy, the Midas model, right? You can go back and watch them, right? And once you are familiar with that strategy, right, and you want to trade the New York session as well, then this strategy is going to be for you. And we only trade NQ for this strategy, and that's primarily the strategy that I use to trade live in front of the Discord members, over 100 members, and you can, and we had like 100% win rate for this entire week, which is absolutely crazy. So I passed those accounts in like within like 2 weeks, less than 2 weeks actually. And this strategy is so powerful when implemented correctly, all right? So the very first thing is that you have to mark out a high time frame fair value gap. Now this could be the 1 hour fair value gap, could be 15-minute fair value gap, and also could be 5-minute fair value gap. Now once you have marked out the fair value gap, what you are expecting is after the market open, or even before that, price taps into this fair value gap. Now, this is step 1. When price taps into this fair value gap, what you have to do is you have to drop down to 1 minute time frame. Now, when you are on the 1 minute time frame, you have to look at the correlating asset of NQ, which in this case would be ES, right? Now, once price is inside the fair value gap, you have to look for SMT divergence with ES. So in this case, what you can see is that price has made a lower low, lower high, and then a lower low on NQ. But let's say that price on ES fails to create another lower low. Now that, ladies and gentlemen, is your SMT divergence. Now primarily, I would trade ES. Why? Because it is much stronger in terms of being bullish. But since I only trade NQ, I only stick with NQ, if that makes sense. Now, once you have SMT divergence, right, after the market open, which is 9:30 a.m., right, and price is inside the fair value gap, it has tapped into it, you're looking for then a 1 minute SMT divergence. Now that is step 2. Now what is step 3? Step 3 is that you have to mark out the dealing range high and dealing range low. So this is the dealing range that we currently have and we are dealing with, right? Now inside this dealing range, what you have to do is identify a fair value gap. So let's say there is a fair value gap over here on the 1 minute time frame. Now the next step is very simple, ladies and gentlemen. All you're looking for is to price inverse that fair value gap on the 1 minute time frame. Now as soon as price inverses that fair value gap, what you're doing is taking a long position right here, and you're putting your stop right below the bodies here, not the wick, but below the bodies, okay? Now once you have your stop loss set, the risk management is the most important thing of the strategy. Without proper risk management that I'm about to teach you in this video, you will not be able to succeed with the strategy, and that is what it is. Now, the very first thing that you have to keep in mind is that you are going to go break even as soon as the closest liquidity pool is hit. So in this case, what we have is this high over here. Now that high is the closest high or liquidity pool after our entry. Now let's say that this is your entry over here, right? And you're aiming for, let's say 1 to 1.5, okay? And we take your entry, and when price reaches that level, you go break even, right? And then you can take one partial at 1 to 1 over here, right? This could be your first partial. And you can close your entire trade at 1 to 1.5, or in most cases what I do is I hold the trade until 1 to 2 is reached, or we have some form of, equal highs that are very clear, and I know for a fact that price is going to go towards them if my bias is very strong. So I hold the trade till that level. Now this is basically the entire model, but there are some rules that you have to be careful about. So inside this dealing range, let's say that there are more than one fair value gap. So let's say there are two fair value gaps over here. And now what you would do is wait for all of them to get inverse. So we have the first fair value gap and the second fair value gap. Now you wait for price to close above all of these fair value gaps. Now once you have that, you have SMT divergence. We are coming from a higher time frame PD array, which in this case is a fair value gap. Now the higher time frame PD array could be auto block as well, could be a breakup block as well, right? But number one thing, you should be trading with the higher time frame auto flow, right? This is one thing if you want to increase your win rate. And then next, you wait for price to tap into a higher time frame key level, which in this case is a fair value gap. Let's say this is a 15-minute fair value gap. Now, once price has inversed all of the fair value gaps, you simply just take your entry right here. You put your stop right below the bodies, right? And you go for 1 to 2 or 1 to 1.5 if your bias is strong. That's pretty much the entire model, but I'm going to give you guys some examples so you guys can understand correctly. Now this is how it would look like when you're about to take a short position, right? Price, as soon as it closes below it, you're not waiting for a retest, you're not waiting for anything, you're just entering right away, and you're holding till 1 to 2 or 1 to 1.5 or towards the drawn liquidity. Now one key thing to note is that before your entry, let's say that the closest liquidity pool is hit. So this is the closest liquidity pool, the break-even zone, and let's say price moves towards the break-even zone without giving you an entry, then in that case, the setup becomes invalid. Okay, we are not looking to trade anymore because this simply could just be a liquidity sweep and price can then push up from here. The goal, the risk management, is that we have to protect our capital as soon as possible. So as soon as we get into trade, our first goal is to go break even as soon as possible at a logical level. And the logical level is the closest liquidity, could be low or could be high. Now with that in my now that we're done with this, let me give you guys some examples, and yeah, and then I'm gonna end the video. All right, here is example 1, and this is basically the trade that I passed my 300K accounts with. Like this was the last trade that I took before passing my accounts. I didn't pass them in one trade. It's not like that. I don't over risk. I don't like go full port and then try to pass like gamble. So what you notice here is that we have been bullish on the 15-minute time frame, right? After we took out the London low, probably we took out the London low, yeah. So we took out the London low, right? And with SMT, and then you can see that we kept pushing up. Now, what I had in mind is that first off, I saw these equal highs over here, and also I saw these fair value gaps that were like left, right, open. So over here, what you can see is that we have this tiny fair value gap, okay? And right here, the market opened. So I was patient enough. I kind of missed this move over here. We tapped into this fair value gap and then we had to push up. But I waited for price to create another fair value gap. And over here, you can see we created one and then we tapped into it. So let me zoom in to show you how I took my trade. So if I go a bit here, oh, where did it go, bro? Anyways, here it is. So if I go here, you can see that we have this fair value gap, right? And inside that fair value gap, what we had was SMT divergence. So let me show you like that. So price failed to create a lower low on ES, but we did so on NQ. Now, from this dealing range high to this dealing range low, what we had was this fair value gap and this tiny bit of volume imbalance. So when there's volume imbalance, I take them into consideration as well. Now, as soon as price closed here, that was pretty much my long entry. I got a late entry because when I pressed the button, it lagged for a bit and then it got me in somewhere around here. But you can see how this played out. This was my long stop were below the bodies here, and it was absolutely beautiful. I got out early because I was done with passing my account. So I was like, I'm done. So I don't need to hold any longer. But yeah, everyone made money and we had like 100% win rate for the entire week, which is absolutely crazy. And we had like about 80% so far since I started streaming, which is crazy. If your guru is not live streaming, he's not real guru. Trust me. Anyways, that was the first trade example. Let me give you guys some more. All right, so here is example 2, and you can clearly see on the 15-minute time frame we have a bullish order flow, right? And the market opened somewhere around here, but just below that, what we had was this fair value gap over here, right? And you can see how price couldn't close below it. So bodies tell the story, right? So let's go to the 1 minute time frame. And I took this trade as well with the Discord members. Now we were inside the fair value gap, and this move right here, even though we closed below the 15-minute fair value gap, but that was just a wick, okay, on the 50-minute time frame. Now notice here, like, put your focus on this low over here. We failed to take out this low over here, but we did so on what? On NQ, right? And we also took out this low over here as well. Now, as soon as we had that, I was looking at this dealing range, okay, from this dealing range high to this dealing range low, and we had these two fair value gaps. Now, what I did as soon as price inversed above this, that was my long. My stop was somewhere around here, probably, I think it was around here, and I went for 12115 because we had these equal highs here, and I knew that when price goes here, there's a possibility that price can reverse from that level. So very simple stuff. Price taps into a higher time frame level. We look for SMT divergence, right? And then we look for inversion. Now, a key thing that I will tell you is look for these V-shaped recoveries, okay? So instant liquidity sweep, SMT, and then instant recovery back up. So liquidity sweep, and without any consolidation, price pushes up aggressively and inverses all of the fair value gaps, or a fair value gap if there is one. And that was pretty much the trade I also took with the Discord members and also on my challenge account. So let me give you guys one more example. All right, so here is the final example, and that was the trade I also took with my Discord members, which is crazy. So over here, you can see that after we took out the Asia low, we kept pushing up, right? So what I looked for was a fair value gap, simple as that. So on the 15-minute, we had this fair value gap. Now let's go to the 1 minute time frame. Now here was the market open. So let me just go here. Okay, so we have the market open right here. Price pushes down once again inside the fair value gap, and then we get an SMT divergence. So the SMT divergence would be somewhere around here. Okay, cool. So notice how we made a lower low on NQ, but we failed to do so on on ES. Now, what I looked for was V-shape inversion. We had from this dealing range high to this dealing range low, we only have one fair value gap. And as soon as price closed above it, that was a beautiful long. You can see how quickly price went up. Stop was somewhere around here. And for this, we went for 1 to 2. Why? Because we had a bunch of liquidity here. And also, I took a little bit of risk and held the position. We took one partial at around 0.7 here, somewhere around the liquidity levels, right? Because this was kind of like a resistance level here. So I was kind of curious how would price hold. But if price would hold here. But that was pretty much the trade. I really hope you guys enjoyed this video. This is how I passed my 300K accounts, and I'm currently funded for over almost 1 million now in total. So, which is absolutely crazy. So yeah, thank you so much for watching. If you're interested in live trading with me every single day with this exact same model, there's a link down in the description that says that become profitable in 90 days. Click on that and you will see how many benefits I offer and stuff. I hate promoting shit, but it is for your own benefit. I'm going to see you guys in the next one. Take care. Goodbye.